South African inflation has increased following a revision in the data used to assess household spending, prompting caution among policymakers regarding potential interest rate cuts next month. Consumer prices rose by 3.2% year-on-year in January, up from an unrevised 3% in December, according to Statistics South Africa. Meanwhile, core inflation, which excludes volatile items like food and energy, also met expectations at 3.5%. Additionally, key contributors to January's inflation included housing, utilities, food and accommodation. Standard Bank economist Dr. Anna Moolman shares further analysis on the recent figures.
Consumer inflation increased marginally in January this year, but it remained quite low at just 3.2%. That is, of course, slightly lower than most people's wage increases or total income growth. And if we then think of your spending power in real or after inflation terms, then it suggests that there is more scope for consumers to purchase more and spend more in real or after inflation terms in the coming year. And this is then, of course, the key driver of our expectation that real consumer spending growth in the coming year will be slightly better than what was recorded last year. It is particularly noteworthy that food and fuel inflation remains quite benign, with food inflation just 1.5% on a year-on-year basis, and fuel inflation indeed still negative in January at minus 4.5%. So clearly some support and relief for SA consumers.